was on a school board as well in Muskego, so I kind of understand what it's like to be you guys listening to someone who's kind of talking in language that you may not understand. So I'm going to try to hit high level what I think is really important for you to understand. This district has got its financial house in order, and you're going to find that out very quickly. They're doing very well from a tax standpoint, from a bond rating standpoint, and we're going to talk about a couple of those pieces. So first, I just want to talk about how school revenue is brought in, and just a basic general understanding of school levy and mill rate, because we're going to be talking a lot about mill rate and taxes and what a new borrowing or a new building project might cost for you. So I want you to understand that. A little bit about the financial house, their bond rating and debt status, looking at maybe a new debt structure, and then just some statewide statistics just to kind of bring it into perspective for you. So the first slide I always like to show is how does school districts bring in revenue, and how school districts bring in revenue. It's a pretty complex formula, but essentially it's based on student enrollment. How many students do you have, and a per pupil amount that the state allows you to raise, and it's in taxes and state aid, and it's called your revenue limit, and it's a limited dollar amount. It's a limited dollar amount of dollars that can come into the Medford School District for them to operate. That is why the question in a lot of your minds is, well, why can't we just pay for our facilities through our budget, through our annual budget, the money that we get on an annual basis? Why can't we, upgrade our facilities, our inner envelope? And the reason why is because you're limited to the amount of revenue you can bring in based on whatever the state formula is. So when I was on the school board in Muskego and we were trying to, fit all of our expenses underneath this limit of revenue, what is the first place we cut? We didn't want to cut programming. We didn't want to cut books. We didn't want to cut anything that affected kids' learning. We cut facility. We pushed the facility projects down the road. Every district in the state of Wisconsin does that. So you're not alone as to why we can't afford it under our annual budget. So the other way to do that is to really ask taxpayers, ask the community to borrow money to finance all of these projects. So the revenue limit authority is kind of a bummer, but it is what it is. It's the way the state of Wisconsin schools are funded. A little bit about your tax levy. So there's a revenue limit. I just talked about that. That's your operating tax levy. There's a red box around that because it's limited. You cannot increase that unless you go to voters. But we're not talking about that portion of your tax levy. What we're talking about is the right side, which is your referendum debt, your principal and interest payments on debt. And you'll find out that we are coming near the end of your principal and interest payment tax levy. So again, there's three components to your tax levy. We're talking about referendum debt. We are not talking about the operating portion, which is really the biggest portion of your tax levy. Okay, so Medford levies a tax of $7.6 million to its community. What does that mean to you? That's what you want to know. I mean, $7.6 million doesn't say much until I can tell you what it's going to look like on your tax bill. So it's simple. You take the $7.6 million and divide it by all the property value in the school district, and you come up with a mill rate. And mill rate is used to calculate what your taxes are and how you compare to your neighbors. So in your case, the total levy of $7.6 million is divided by all of the property value in the school district, and your mill rate is $8.33. Move the decimal over 2, and that's taxes on a $100,000 home. So if you have a $100,000 property, your tax bill estimate, I'm going to estimate because there's a little bit more that goes into it, is $833 on it for the year. For the school portion. Now there's city, town, village, county, tech college, and all of that. Okay, so when you see mill rate, move the decimal over 2, and that's taxes on a $100,000 property. Double it if you have a $200,000 property. So we're going to be talking about mill rate because I'm going to show you the historical mill rate for Medford. Again, financial house in order. It has stayed pretty steady and come down. Those blue bars are your mill rates. That line, the line you see on there, that's state average. This district has kept under state average consistently year over year for its mill rate, the taxes. How you compare to your neighbors, you're the third one in, that dark bar, that $8.33. To the right of you is Rib Lake, Colby, Tomahawk, Mosinee, Rhinelander, Gilman. They all have higher mill rates. If you live in Gilman and you have a $100,000 property, your taxes are $1,178 for the school. Double that if you have a $200,000 property in Gilman. So financial house in order, you know, compared to your neighbors, you look excellent. This is going to come up in another topic of conversation, but I want you to know that you are limited by state statutes as far as how much debt, how much can you borrow as a school district. You have a limit, and your limit is 10% of your property value. So in this case, your property value this year, $970 million, you're limited to $97 million. You cannot borrow more than $97 million. I don't think you're going to, but know that that's your limit. And every district in the state of Wisconsin has a limit on how much they can borrow for facility projects. A little bit about your financial house. I'm not going to go through all the detail here. The last time you borrowed in 2016, Medford was assigned a bond rating from Standard & Poor's of a AA-. A AA- bond rating is a great bond rating for a district your size. And again, the reason why you have that high bond rating is because your fiscal house is in order. You have strong finances. You have low debt, very low debt levels right now. You only have one small loan outstanding. And you've consistently shown very stable finances over the years. And of course, there's other factors that go into bond ratings that is not in your control, like local economy and those kinds of things. But a AA- is a great bond rating. Why is that important? Because if you go to borrow again, the higher the rating, the lower the interest rates. The lower the interest rates, the lower taxes you pay. So it's good to have a strong bond rating. Okay, this is kind of a little bit, there's a lot of information on this chart, but let me just show you let me point out a few things. We are looking at debt payments. Your debt payments for Medford School District are the bottom light blue bar. So you have 3, 6, 7 payments left on the last referendum borrowing from 2016. 7 payments left. I think the balance is somewhere in that $3 million range. Okay, low debt, rapid payoff. It's almost paid off. Many districts, their debt goes out full 20 years. So what we're doing this year in the left-hand bar is we're able to still maintain that low mill rate, the $8.33, and levy a little bit more to prepay debt. So we're setting ourselves up in a situation where we're going to prepay debt in next year and possibly add on a new borrowing. So that teal color is a hypothetical new borrowing, so new debt payments. So what you see there is no increase. The current year is on the very left. Those are your current, that's your current debt levy, debt taxes. And then to the right of that would be if you had a new borrowing put on, kind of layered on top, we call it a wraparound, your debt payments would remain flat, or your debt levy would remain flat. And that is for a $20 million borrowing. So keep in mind as you're going through this process that for $20 million, there would not be an increase in the taxes. Now, if you didn't borrow it, you'd have a decrease, of course, right? A little bit about the district's referendum history, and this will be on the website so you can review it later. Again, last time you went to referendum was in 2016, and for 2 questions, and that those referendums passed. I always like to give you a little bit of information on your neighbors, what the neighboring districts are doing. It's important to understand the facts so that when you get asked, you know that what the facts are. Again, another slide that will be on the website. A couple of statistics. This is very interesting because as of just this year, well, actually, since 2010, 82% of Wisconsin school districts have gone to referendum. So it's a very common practice. Again, because of those revenue limits, districts need facility upgrades, can't pay for it out of their budget. They're asking taxpayers to borrow money to pay for that. And we had some great success this year. This is a chart of dates, again, something that will be on the website. What you need to know is that there's only 4 opportunities in 2020 to go to referendum. The new state law, put in place, 2 years ago, only allows you to go to referendum on a primary or general election, both in the spring of even years and the fall of even years. So there's 4 opportunities next year in 2020.